Hi friends, in this video we will discuss how to trade sideways market. People tend to believe that a traveling flow or a running flow or a trending market is rather easy to trade rather than sideways market. However, it is little contrary in my perception. It's because when price is in sideways motion, price reaches deep into supply or demand zones and gives us an opportunity to enter or exit trades with small stop loss. We can also predict or watch what could be the next movement and where could price travel if at all it takes off or takes from any relative position, maybe a supply zone or demand zone. So, in my opinion, a sideways market is rather easy to trade. Let me show you how. This is Bank Nifty's chart of 15th September 2022. Price has broken down the major low that was created yesterday and making that the sellers from this zone are dominant. The market has gone into sideways with slight momentum towards upside, but let us see how we can trade this. So when market reaches this level, price is testing this level once again. So when price tests this level, which is the normal demand zone, what we can do is we can draw some pitchfork to align our context. Since price is in sideways, rather than taking a regular pitchfork, we work with a modified pitchfork. So if I draw a modified pitchfork between the latest vectors, major highs and lows, price is respecting the midline of this frequency at this level and creating a fractal bar, a bullish bar. So this is certainly an opportunity for us to go along. So to which position can we expect price to reach? Obviously the latest demand zone, because price has some barriers on its way up, and if it meets certain barrier, it has the capacity to nudge the price in the opposite direction. So this is the latest supply zone. As we anticipated, price has kicked off from there here and then reached the respective supply zone. So there is pitchfork that we can employ in this trade is probably this one, or a modified pitchfork, because when price is sideways, we tend to use modified pitchfork rather than the regular pitchfork. Okay, so this pitchfork makes some sense because in the midline of this section, price is respecting. However, it has hit some barrier in the bottom line direction that it moved and price to the expected supply zone. So if we shift this pitchfork to the upside, see how price is exactly respecting the upside of this pitchfork. So this is how the ability to use pitchforks vary with the context and the skill. And so this is one successful trade for us in the sideways moment. When price tested this level, we certainly have an opportunity to go short with a risk reward ratio of again 1:3. So we also have some line work with the latest pitchfork here. We have short the position. However, price did not reach this level, the anticipated supply or demand zone. It just reached this the latest demand zone and then pick it off. However, when price reached the outside line of this, frequency of this major solid, minor solid high, then again created a fractal bar. So we have another opportunity. We can have, the context of the latest trend lines. You can see, so price is respecting this trend line once again, which it respected yesterday. Price touched this level. We have a solid structure in the minor flow. We have a fractal bar, and then we have a wick pitchfork in the extended zone. So price is respecting this zone exactly the way we anticipated, and this is certainly an opportunity for us to go short with 1:3 risk reward ratio. I'm erasing of all the videos, all the lines, sorry, and then creating the latest pitchfork that makes some sense. So since now we expected this to be a market edge, now instead of taking regular pitchfork, we can think about a standard pitchfork, because price is now expected to travel in the downward direction. The price pitchfork has some sense because it is respecting the midline at this level and creating a major high. So I am expecting that price to move further tomorrow and then reach this level. And in terms of risk reward ratio, we have already made a sharp position, a put call with, I mean, a put trade with 1 is to how much, 2.94, almost 3 risk reward ratio. So being an intraday players, we have exited this position because price does unexpected things. So we have exited this position. However, tomorrow I expect that price may travel little further. How if this barrier is unable to hold the price further. So this is how we analyze trades, guys. If you are interested to learn these advanced techniques about price action, please ping me and you can take up one of my training courses. Thank you.